Welcome back to the channel. My name is Wajaha and today we're doing another deep dive, this time on a protocol that everyone on crypto Twitter has been talking about. Yes, we're talking about Pendle Finance. Let's get straight to it. Yeah, we're just going to jump straight into it. This is going to be a deep dive, so it's going to be a long one. Sit back, relax, grab yourself a cup of tea, get a snack, some popcorn if you like, because it's going to be a long one and we've got lots of stuff that we're going to jump into today. The Pendle Finance everyone's been talking about, and I thought we might as well do a deep dive. So what are we going to cover today? We're going to cover, first of all, the idea of principal versus yield. We're going to talk about what Pendle Finance actually is, buying assets at a discount, trading yield. We're going to talk about liquidity and the LSD narrative as well, and the protocols built on top of Pendle, the token itself, the bear case, and we'll wrap it off with some of my overall thoughts as well. So yeah, the first thing I think that we want to look at is this tree, and this is an apple tree actually, and I think it's really important that we kind of understand this, because without understanding this you can't really appreciate what Pendle has to offer. So this is an apple tree, and an apple tree has two components to it. It has the tree itself and the apple, and what I like to do is I like to think of the tree being the principal and the apple being the yield, and that's because every single year when it comes to summertime, you can pick these apples off the tree and eat them, sell them, do whatever you want with them. The tree is always going to stay there, but every summer new apples are hopefully going to grow, and by thinking about this you can basically categorize the apple being the yield and the tree being the principal, and as I mentioned here, the market is always open to selling these yields. So sometimes in summer you're going to get more apples growing, which is going to result in more income. So just to kind of appreciate that sometimes the amount of apples that you grow on this tree can go up, sometimes the amount of apples can go down, but the tree remains one. The tree remains whole, doesn't change. Now, I want to basically use this example with Pendle, and that's because that's pretty much what Pendle offers. Now, before going into that, we need to understand how this same mechanism applies to Ethereum. Now, you've got your Ether, and you can do lots of different things with your Ether, but one of the things that you can do is you can stake it. You can help participate in the network, bring security to the network. And one of the ways that you can stake it is you can go to somewhere like Lido, and you can stake your Ethereum directly, and you can earn around 3.8% as of when I took this screenshot. And you can see here that there's around $14 billion of Ether staked at the moment. And Lido is the largest liquid staking provider around at the moment. So if you were to take your Ethereum and stake it, what would actually happen in 1 year? Well, let's say you've got 100 ETH. If you stake this in Lido as STETH at a rate of 3.8% APR per year, your 100 ETH would be 103.8 ETH. So you'll have your 100 ETH plus your 3.8 ETH, which is your yield, and that would be equivalent to your 100 staked ETH for 1 year. So essentially we have three components in this. We have the staked asset itself being STETH, we have the principal token being vanilla ETH, just normal ETH, and we have the yield as well. I've written here yield token, we'll kind of go on to that shortly, but the yield as well, which is the 3.8 ETH. And we can basically form very similar descriptions here with what I discussed before, with ETH being the tree, the principal, doesn't change. Your 1 ETH is always 1 ETH. But we could actually take this yield, this 3.8%, and we can compare that to the apple that grows on this tree. This is the yield that comes from your ETH. And essentially, based on this, we've got the underlying staked asset equals the principal token plus the yield token. If we're able to tokenize this, we've got the underlying staked asset equals the principal being ETH plus the yield. And that's pretty much what you get after a year of staking. So what is Pendle Finance? Well, Pendle Finance allows users to split their tokens into principal and yield. And we can do lots of really interesting things with this, such as buying assets at a discount, earning significant amounts of passive income with liquidity, but importantly, being able to trade yield. And we're going to dive into that right now. So if you go to the Pendle Finance application, this is what you'll see. You'll see a dashboard with lots of different assets here, and the example that we just discussed, STETH, and you'll find lots of other ones as well as a variety as well as a variety on Arbitrum. So this is on Ethereum mainnet. You'll also see a variety of assets on Arbitrum too, and you will be able to see lots of data around them. And what you will see is that you'll hear these terms yield token and principal token repeated again and again. And that's because all of these assets are actually yield bearing assets. So we've got staked Frax ETH here, we've got STETH from Lido, and some of the other ones that we have on Arbitrum that we'll show you later. Essentially, all of these assets can be split into the principal token, so ETH, and the yield token, being the yield that you earn from Frax in this example. So let's go down and have a look at one specific example and kind of see if we can understand what's actually going on here. So with Pendle, you've got the ability to split this asset, this staked Frax ETH asset, which is obviously an asset that's earning interest. It's earning, I say interest, it's earning yield actually in the form of 5.35% at the moment. So that's the APY that we get on Frax Finance if you were to take your ETH and stake it directly there. This is earning that. So essentially what you could do is you can actually split this token into that yield component, tokenizing that, and also having your original principal token. That ultimately means that you can basically buy this principal token, which is basically your ETH without the staking yield, at a discount. And the discount is what you can see directly on screen. Now, maturity is basically how long until this principal token can be redeemed for the underlying. So essentially what you could do is you can buy this principal token, which is giving you this ETH at a slight discount, 4.89% discount. And after 550 days, you can actually redeem this directly for staked Frax ETH. And ultimately, you're just getting the discount up front, which you would have earned in yield otherwise over that time period. However, what you're doing here is you're able to lock in that yield straight away because you're getting it in the form of a discount. So what could happen in future is the yield could go down. The yield could actually go up. But if you think that the yield is going to go down, then this might be something interesting for you to do because you can basically lock in that discount, lock in that yield at that price then and there because you're getting it at a discount. Now, as I mentioned before, underlying represents the yield that you would earn if you were to take this asset and stake it on Frax. Implied APY, however, is basically the current market APY on Pendle Finance. And so you may see that there's a bit of a discrepancy here. The current market thinks that the actual yield for staked Frax ETH is only worth 4.89% a year. But actually, on Frax Finance, the yield is a little bit higher. And ultimately, that means that there is some speculation going on around what will happen to the yield. Is it going to go up? Is it going to go down? That is the question that lets users speculate. And how can you speculate? Well, you can speculate with this yield token. Now, we've talked about the principal token. Now let's talk about the yield token. The yield token currently has an implied APY of 4.89%. That's what it means. And essentially, if this implied APY, which is what the market currently is pricing this yield at, goes up to the underlying yield, which is the current APY that you can get on Frax Finance, that's where this 9.2% comes from. If it were to jump from this to this, you would make 9.2% APY. Yeah, we're going to talk about this in a little bit more detail, but that's essentially what all of this data means. So we've covered the asset itself, maturity, meaning how long until you can basically redeem the underlying PT for the token itself. The underlying APY being the yield on Frax Finance, the implied APY being what the market currently is pricing the APY at, and then these two tokens that you can buy. And you can see that they've got a price here, but if you combine them together, you can redeem it for the underlying at any time whatsoever. So when would you actually want to buy any of these tokens? When would you want to consider buying this principal token? When would you want to consider buying the yield token? And I've got this from the Pendle website itself, and it explains everything so nicely. So if there is anything that I haven't explained too well, just go to the Pendle website. They've got a tab there on the top, a Learn tab. Just go and have a look there and read up on some of the docs there. But essentially, if the implied APY is high, so let's go back to this example. You can see that here we've got the implied APY. If it's high, then PT is quite cheap and the yield token is quite expensive. And so if let's say this implied APY was 10%, for example, well, ultimately that means that your principal token is going to be almost at a 10% discount. That's pretty good, especially if you think that yields are not going to sustain itself at that high, at that level. So when you see implied APY really quite high, it means that the principal token is quite cheap. And the opposite is also the case. If the implied APY is quite low, it means that the principal token is quite expensive, but the yield token is actually quite cheap. So if we go back to this example, if this implied APY was 1%, well, to be honest, I think staking with Frax is going to generally over time be a lot higher than 1%. Then the yield token being implied at only at 1% is actually quite cheap, and really it should go back to that 4 or 5% mark. And if it does, that means you're able to profit quite significantly, because going from 1% to 4% is a 4x, and ultimately that means you can make 400% by longing the yield token. So I hope that makes sense. We can go into a few more specific examples as well here. So again, I took this from the Pendle website, so go and check it out as well. So essentially what Pendle say is, when should you buy the principal token? Well, the fixed yield from buying and holding the principal token is dependent on the market and current principal token price. So you should buy the principal token when it is cheaper, as you would get a higher fixed yield. But how can you tell that it's a cheap price? Essentially, it's, as we just said on the top here, we should buy when the implied APY is quite high, because that means the yield is actually a bit too high for what it should be, and intuitively makes the principal token quite cheap. So pause the video here, you can read the rest of this as well. They mention a few things that you should consider, such as your prediction of the average future yield from now until maturity, and given the current prediction, is the current fixed yield good enough to lock in? So as I said before, if this staked Frax ETH implied APY was 10%, that means your principal token is going to be at a 10% discount. I think if you're getting ETH at a 10% discount, generally that's quite a good thing. And so it's generally going to be better to buy principal tokens when implied APY is high. And you've got to think about that in the entire length of this maturity, of this duration. So you've got to think in the 550 days, does this represent a good deal or not? And that's something that you've got to figure out yourself, really. Of course, you've got to also consider the price of the underlying asset as well, because of course, if ETH, if you're bullish on it long term, that's good. But if you're bearish on it, then ultimately that's going to affect some of the considerations that you need to take in as well. Moving on. So here's an example. So there was a time where Frax ETH and staked Frax ETH was actually earning 9.19%. That is a very, very high yield. Is this yield going to maintain itself? Unlikely. And we've seen it ourselves. It's gone back down to 4 or 5. So essentially you could lock in this yield by buying the principal token. And that's essentially the point I'm trying to make. When APRs are really high for things like staking, that's when you want to lock in your principal tokens. And moving on to the yield token, essentially the same thing again. If the implied APY is low compared to the underlying APY, then you're more likely to profit from buying the yield token. So again, pause the video if you want to read any details on here. You can find this yourself on the Pendle website, but it's really good. But I'm not going to focus too much on it because I've kind of explained it a few times now. So again, if we take this example with STETH, you can see the implied yield is less than 3.5%, which generally, for some people, might be a bit low, especially as we've seen the underlying be a lot higher, and sometimes even the underlying going to as high as 5%. So, the question is, do you think the yield, the rate that you're getting paid out in yield is going to go up? And by buying this, you have a lot of capital efficiency, because if the implied yield is 4% and it goes to 5%, well, that's a 25% return on investment. So this is a way to really potentially make quite a significant amount if things go your way. So again, it's just something to consider here about when you should buy the yield token. So here we go. Here's some examples that I found on Arbitrum. It's not just related to ST ETH. You can create a market with any sort of yield-bearing asset. So we have GLP, which is the liquidity token for GMX. And you can see here that the implied APY is currently 16.5%. Ultimately, that means you're getting GLP at a 16.5% discount. So yeah, if this APY is quite high for you, then you might want to go for the PT token. If you think that yields are actually going to go way high and you think GLP earners should be earning 30%, then it might be a good idea to long the yield token. That's for you to decide, that's for you to research and for you to figure out. Similarly, they have GDAI, which is the liquidity token for Gains Network, the perps exchange. And they have Stargate USDT, which is earning Stargate rewards as well. And you can basically apply the same principles here. You can either decide, actually, you know what, the current yield of 3.26% is quite good. I'm happy to get my USDT at this discounted price. And then you can wait 359 days until you want to redeem it for its underlying asset. Where you'll make 3.26%. But you could also think, actually, you know what, I think actually the yield is going to go up more, and if this yield from 3.26% goes to what it is at the moment, 3.66%, well, your yield token is going to make around 12%, so you could make a lot more doing that. Ultimately, it's up to you to decide, do your research and figure out which strategies are going to work. Sometimes there might not be a strategy that is working at the moment, and you might just have to wait for opportunities to present themselves. But that's what Pendle allows you to do, and I think Pendle does it very well. So how does it work exactly? Well, let's say you've got your standardized yield token. So you've got your USDT, which is deposited into Stargate. That's tokenized into the standardized yield token. So you've got that token that is earning a rate of whatever the Stargate rate is at the moment. So you take this token, and in this case USDT, and you can which is deposited into Stargate already, and you can split this directly into these two tokens, the principal token and the yield token. Of course, if you add these together, you get your underlying back. And these assets, this PT token and yield token, can be traded freely on the market, and that's because there is liquidity for it. There is this unwrapper as well, so if you wanted to go back, let's say you've got your SY token, you can kind of directly go back to the original asset as well, and you can do this directly on the app. So let's talk about liquidity. How can you trade these yield tokens and PT tokens? Well, you can do it directly on Pendle. They've got markets for this all, and you can see that these PT tokens, these principal tokens, are actually paired and pooled, and you can see that there is a fair amount of liquidity here. Most of these pools have $1 million, some of them even have $10 million plus liquidity, so there is plenty of liquidity for you to trade against. Ultimately, that does mean if you're an institution with size, probably going to make it a little bit difficult because you'd have to account for slippage and things like that. But if you're someone like me who's broke, slippage shouldn't really be an issue here. And I just wanted to showcase some of the different pools on Arbitrum and Ethereum here. Some of them have pretty deep liquidity, especially things like the GLP, the GDAI, and the USDT Stargate pool. As you can see here, decent liquidity. And overall, I believe Pendle has over 100 million in TVL, so a good sign as well. So let's talk about the Pendle token. What's the point of it? Well, essentially, you can lock it as VE Pendle, and in doing so, you can actually vote and direct the flow of rewards to some of these different pools. So some of these pools do actually earn quite a fair amount. You can see some of the APYs directly on screen here. And if you're a liquidity provider, this might be something that's interesting for you. So you can decide, actually, you know what, I want more yields to go to this pool or that pool or this pool. Again, you can do that as a Pendle holder. And that's pretty effective for DAOs and protocols who may want to get involved as well. Now, Pendle does also collect fees. All of the yield accrued by the yield tokens, 3% of it will go to VE Pendle holders. The protocol doesn't actually collect any revenue just yet, but I believe that is subject to change. And importantly as well, by locking your Pendle tokens as VE Pendle, you can actually reward get your LP rewards boosted up to 2.5x, and that's why you can see here that there is a range, and if you really want to maximize and get the highest yields here, you'll need to do so with some VE Pendle. Here's a chart of the Pendle token. As you can see, up only in the bear market. This just goes to show that if a protocol innovates, if a protocol brings new products and markets very well, what can happen? And you can see that this is just generally over time, over the last 6 months, has just been gradually going up and up and up and up. How long that's going to go on for, I am not sure, but it remains to be seen. So currently, I believe we have a market cap of around 175 million. By the time you're watching this, this will fluctuate a little bit because prices do change. But still, you could argue this is fairly low. You can see that the Pendle supply is going to continue going up. So we are around somewhere down here. So maybe around 260 million tokens, somewhere around there at the moment. And this is gradually over the years just going to slowly go up. Luckily, the inflation is not too high here, but you can see that there is a fair amount of tokens coming out. What I found when I went on to Arbiscan and Etherscan is there's about 8,500 holders between them, around 100 million of these tokens being on Ethereum, only 20 million or so being on Arbitrum. I'm not sure if that was accurate or not, but I did get that from Arbiscan. Here are just some of the Arbiscan or some of the wallets holding Pendle on Arbitrum. You can see obviously we've got some of the big contracts and things like Binance. There are some wallets here that do have quite a fair amount of Pendle, and I do wonder if they were going to sell, what would happen. I mean, I did see a number of wallets here holding, you know, these 1.8 million tokens here, 625,000 Pendle there. I wonder if these are wallets that are early investors, and I do wonder if they will eventually dump. I don't know if they will, but just something to consider. And I did actually have a look on bubble maps as well. And most of the wallets are not actually linked with one another. So they could all, some of these could just be fresh wallets, but owned by multiple people. I have no idea. Just something to just be aware of. You know, tokenomics are an important thing to understand and study. And I think you should also have a look here yourself about what is going on with some of these holders, especially some of the larger ones as well, who do have, you know, a fair amount. Like these are holders are holding over $1 million of Pendle, and yes, there is good liquidity, but I don't think it's that good to absorb that much sell pressure and not move the price much. I think with Pendle, you know, offering this innovative protocol, this innovative product, as I mentioned, there are a number of protocols actually building on top of Pendle. We've got Pempe and Equilibra. And you can see them here. Equilibria. I don't know why I said Equilibra. And both of these are basically like convex is to curve. With Pempe, you can see here that you can basically provide liquidity, but without having to own the Pendle token to get that 2.5x LP boost. So you can see here, and the same thing over here on Equilibria. Both of them have a fair amount of Pendle tokens at the moment. They have around 14 million, 15 million Pendle tokens. So not so much of the overall circulating supply, but of the total VE Pendle supply, they do have quite a high share. In fact, if you add them both together, they have 50% of the total VE Pendle supply. You can see here that there are a number of other holders here. Some of these wallets having 5 or 6%. So that is something to also be aware of. I wonder who they are. And oh yeah, you may also know there's StakeDAO being there. There are other protocols as well. We've got StakeDAO and Dolomite as well that have introduced some products based on Pendle as well. StakeDAO offering this SD Pendle, which of course hopefully gives you higher yields when staking, and Dolomite, which actually introduced this PT token, this principal token for GLP, as an asset that you can provide as collateral, and you can borrow against that. And this is really, really interesting because now we finally got fixed yield products in DeFi, and having them composable, being able to do things like borrow against them, game changing. This is honestly really, really big and really exciting to see. So great to see. And I think head over to Dolomite and have a look and see what you could do there, because that is pretty interesting. If you guys are interested, I can make a separate video talking about the impact that having these fixed yield products in DeFi can have, and also talk about some of the strategies that you can do with them as well. So let me know in the comment section below if that's something that would be interesting to you. So yeah, good to see Pempe and Equilibria both doing pretty good stuff. We've got Stake DAO, we've got Dolomite, and I'm sure in due time we're going to see many other players come to the Pendle Wars. I think just before we wrap up here, we've talked about a lot of things. I think it's important to talk about the bear case, and that's because not everything is up only. You know, the question is this going to continue going up? I think we've seen Pendle really do well building on this liquid staking derivative narrative as well, especially as we see so many of these pools, you know, being staked ETH assets, and I think it's really run on that hype quite well, obviously resulting in price appreciation, you know, quite significantly. We've seen like a 25x in price. I think Pendle did actually go above $1 like the day that it got listed on Binance. Oh, I forgot to mention, congratulations to the Pendle team. They did actually get listed on Binance. So let's talk about the bear case, some of the things that could potentially be in the way, obstacles, things that they need to kind of potentially go over. To be honest, there isn't that many. I think Pendle is actually a fantastic product, and they've created something that works really well. One of the things is this too complex for new DeFi users? Absolutely. I think getting your head around these different fixed yields, yield tokens, principal tokens, all of this stuff is relatively new to DeFi. Yes, we have lots of these products in TradFi, but in DeFi it's pretty new. Are we too early? I'm not too sure. I think this is the right time for a product like this, especially because we have seen products exist like this before and do pretty well as well. So yeah, I think this is a complex protocol, so I don't expect new users to DeFi to really grasp onto this straight away. That is just something to consider. They have done a fantastic job at making it easy to understand. Their docs are easy to appreciate. They have a learn tab on their application as well. They've done a great job with marketing too, and hopefully videos like this can also help users, people new to DeFi, to understand and learn kind of how it works. Like I said, it's done a 20x, maybe even a 25x in the bearer. The bear market is still going on. Lots of other protocols that have really good products haven't done the run that Pendle have. The question is, can they continue? Who knows? I mean, can Pendle do another 20x from here? I don't know. If I knew, I would tell you. If I knew, I'd probably have Pendle in my portfolio. I don't at the moment, but just something to really consider. I think liquidity is also another thing. They have good liquidity at the moment, and lots of people are using Pendle because the yields are pretty high. I've mentioned them in my Farms of the Month series before, just because yields were really high. If these yields dry up, if token incentives go down, if token price goes down, are people going to still be using Pendle? I'd like to think so, but it is just something to also think about. I think the other thing is that this idea of liquidity fragmentation versus growth. Now, Pendle are going to expand to other chains. They are thinking of expanding to, they are actually expanding to the Binance chain as well. So we will see other products come. Is this going to cause liquidity fragmentation in the sense of, are we going to see, lots of pools with maybe 1 million TVL in each of them? Does that make a big difference? Would it be better to have, pools with 20 or $50 million in TVL? I'm not too sure, but again, it's just something to think about. Competition is another thing. To be honest, right now, there isn't really many other protocols like Pendle. There was another protocol back when Terra was out called Prism. I'm not even sure if they exist anymore, but I remember back in the days when Terra was a thing, Prism did very well and did grow quite significantly. Pendle did come before that, but I think Pendle have really innovated and kind of built on this idea of principal tokens and yield tokens, and done really well with it. And the other thing is just looking at some of the wallet sizes there. I'm not entirely sure who and what some of those wallets are. Do they belong to just a number of whales? Do they belong to one person? I have no idea. Some of them are quite big. I'm worried about being dumped on. So yeah, just a few things to consider. Either way though, I think overall Pendle is a fantastic product, really innovative. It's on Arbitrum, so it's got cheap gas fees. It's on Ethereum mainnet as well. You've got lots of options to choose from and the ability to really invest in a new type of asset. the yield token. A new way for us to create new strategies. Lots of stuff is going on. We've got these new strategies, of course, the ability to buy this principal token and the yield token, the ability to integrate with these protocols like Dolomite building on top of Pendle. We've got the Pendle wars with lots of protocols accumulating as much Pendle because they know the potential that is here. And yeah, I think it's a game changer. I think things have been going pretty good. How long they will continue to go for, I'm not too sure, but it's an exciting product and gets a thumbs up from me. So let me know if you have any questions about Pendle in the comment section below. Let me know if I can address anything. I hope that I've explained it well. If I haven't, just let me know. I'll probably make future videos or just go to the Pendle DApp. They do have a Learn tab there, and you can basically read up on some of the stuff there as well. So smash the like button, subscribe to the channel, and of course I'll be back with plenty more content and deep dives in the near future.